Hi, my name is Eric Miller. I'm a home loan officer and real estate expert, and welcome to the Secret Menu. We call it that because we always try to throw in a few extra things that people don't normally talk about. This channel is dedicated to helping you learn more about the financial details as well as many other facets of the real estate home ownership, investing, and whatever else might be helpful to you universe. Today, we've got another special edition in a series that I'm calling VA Loans Are for Rock Stars. Now, we've got a mad specific thing that we're going to talk about that almost everyone glosses over. But before we get too much into it, I just want to say thank you to our veterans for your service and your sacrifice for our country. I sincerely hope that this information is helpful to you in some way and that you know how much you're appreciated. It is always an honor to serve veterans. So veterans are rock stars. We can all agree on that. So what better to go along with it than a rock and roll theme? Are you ready for an over-the-top rock and roll themed informational video about VA loans or what? This is how I imagine. I don't know why rock stars would need to do that. So that you know, I'm trying to listen to you, I can't hear you. But if I just do this, maybe I'm like, do you want a VA loan? Yeah! Sit right down while I sing to you. We're talking about VA loans. Hell yeah! You better pay attention till this video's through. If you're not familiar with the other videos in this series, please take a few moments to check them out. Needless to say, they're not paper or scissors. No, my friends, there's only one way that they can go. We're going to talk about the VA funding fee. Most people really just gloss over it, and I get it. The subject can be difficult to explain, can be a little boring, but what they miss in all of this mortgage boringness is really the goodies that can make a huge difference for you, and that's all that really matters. Whoa! Today on the Secret Menu, we're going to be talking about specifically the VA funding fee, which is also, something that rocks, but it's more like a rock in the bottom of your boot, and not just a regular boot, but one of those lacy boots that takes you 30 minutes to put on and off. You're like, oh, is it worth it? There's like a pain threshold versus time management thing. That's what the VA funding fee is like. Whoa! For those of you who are unfamiliar, the VA funding fee is a one-time payment made to the Veterans Administration on the amount that you borrow. The exact amount of the fee depends on the exact scenario and situation in which you're using the VA loan. So we need to break this down into different pathways and get into it. But overall, don't worry about it too much. I've got an awesome and easy to use chart for you to download later. In the meantime, let's start with the first factor, usage. The VA is very cut and dry. It's either the first time you've used it or it's not the first time you've used it. So complicated, right? Okay, so the first time usage means it's the first and only time you've ever used the VA loan. And when you're using that to buy or refinance a house, the VA funding fee is 2.3% of the balance. Okay, if it's anything other than the first time usage, meaning it could be the second or the seventh time, the VA funding fee is 3.6% on cash out refinances and all purchases. Unless, are you ready for the second factor? Whoa! The next major factor is down payment. Most people would never think about putting money down when buying a home using a VA loan because that's what people think of as the biggest benefit. You don't need to put any money down. It's true, but given the right situation, I think it could be a very smart idea. Remember the numbers. For the first time usage, it's 2.3%, and for everything after that, it's 3.6%. So it's entirely possible that you're buying a house on, let's say it's your upgraded home. So you have money to put down from the previous sale, and so you're using the VA loan for the second time or after. If you put 5% down when you're buying a house, your VA funding fee will go from whatever it is up to 3.6% down to 1.65%. Okay, let's just stick with that scenario for a second, and I'll share some numbers with you to show you how powerful it really is. Let's take an average price home of around $400,000. The second time usage is 3.6% times $400,000. Let's say that's your loan. So the funding fee would normally be $14,440. And this is on top of your other closing costs, termite, home inspection, HOA transfer fee, etc. You can see how it adds up pretty fast, right? Now let's say in the same scenario, you're able to put 5% down. The funding fee goes from $14,400 to $6,600 with a savings difference of about $7,800. Okay, this $7,800 is money that you're never going to get back. it goes right to the VA administration. And you may not pay it out of your pocket, but it does get taken off your equity. So if you ever want to refinance, that's less money that you have. When you go to sell, that's less equity that you have. So in this scenario, if you have the 5% to put down, it could make a huge difference. So it's something to think about. Again, if you have any questions at all, you can just shoot me an email or call. But that's a pretty powerful move, so don't forget. Whoa! I have a separate video coming soon specifically on VA refinance loans, but with regards to the funding fee, here's the breakdown. First, the regular rate and term refinances, the funding fee is 0.5%. Quick side note, if you ever see anything, sometimes people get mail and it says you're eligible for an IRRL program. This is what they're talking about. It stands for Interest Rate Reduction Loan. And really they're just trying to be fancy to make it sound like some specialized government program or some elite thing, but really it's just a refinance without taking money out on a VA loan. For cash out refinances, most unfortunately, the funding fee is calculated as either the first time usage, 2.3%, or everything after the first time usage, 3.6%. Last thing, remember the funding fee is on top of your other closing costs, termite treatment, home inspection, maybe HOA transfer fee, and all that other good stuff. The good news is that for purchases, it will not affect your cash close requirement because on a purchase, the program allows you to go up to 103% of the value of the house to cover it. On the cash out refinance side, you have the advantage that you can get an appraisal and start the new loan up to 100% of the value of the house. That's right, you can take 100% of the equity of the house in cash if you want. A lot of times the first instinct in people is to feel bad about either owing 103% or taking 100% out and tapping the entire equity of the house on a refinance. But think about it. In both instances, you're very likely to hold the home for at least another 3 to 5 years. And depending on the other factors, it could be 10 years or more. In the big picture, you get what you want and you can do what you want. And as I've said many times, none of this is about your money. It's about your life. Make the most of it. Okay, so how are you doing? You hanging in there with me? All right, now I feel like at this point I should have a John Rambo thing, but you know, why can't I have a John Rambo thing? You guys remember John Rambo?
It's over. Nothing is over.
All right, how about a rock and roll fist bump?
Nothing.
You're not really there. Okay, we'll go through this last section pretty fast, but it's super important. So, you know, all right. Every new VA loan purchase or refinance has some kind of funding fee, always and without exception, unless you have an exception, which is what we're going to talk about next. Whoa! Typically, the VA funding fee waiver is aligned with some kind of disability classification, and in most cases, if you are disabled in service, you will get the waiver. It'll be on your DD-214. We can look it up. So that's one way, but they also have a funding fee waiver if you've earned a Purple Heart, or if you're a surviving spouse for somebody who is defined as eligible for receiving the waiver. Here's the bottom line. If you have a funding fee waiver, you easily have the absolute best loan scenario available in any situation, without exception. Purchase, regular refinance, cash out refinance, whatever you want. Whoa! Well, that's the end of this video. Man, hate to end on such a good point. So boring. Gotta do better. Do you mind if I have like a big time rock and roll ending? No? Okay, good. Okay, here we go. Lights! 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 Without exception! Fire! Woo! That's a great end of the video. What do you think? A little over the top?
You watch my back, I watch yours.
Wait, okay. Okay, I gotta go. Like and subscribe, sharing is caring. If I survive this, I'm hoping that you go on the channel and stuff. All right, thank you, veterans. I love you. Thank you. Bye.